that the BOJ helped spark this huge market rout. He's played down the rate hikes significance in terms of sparking the rout. That's the rate hike on July the 31st. At the same time, he said the decision was appropriate. So I think a lot of the check boxes that Mr. Ueda and his team might have had early this morning, I think he's managed to get them all checked off pretty well. So I think that leaves a rate hike in the coming months still on the table.
What is going on, guys? What is going on? Market just opened. I was just checking out what's going on in Japan here because their central bank chief was talking about. Wait a minute. Can you hear me? Yeah. Can you guys hear me? Hopefully you can hear me. But their central bank chief was talking about potentially raising rates once again, depending on what the economy of Japan dictates, right? So I don't know if that's considered hawkish or that's considered expected, but so far the market isn't really reacting to that. What happens during the webinar? You learn how to trade, so sign up to it. It's 100% free. All right, let's see what is going on with the market real quick. So we have Jackson Hole at 10 a.m., right? So the Fed is going to speak in about 29 minutes. Now, this is not a Fed meeting, okay? This is just a symposium in Jackson Hole, Wyoming, where a bunch of rich people get together. However, because we don't have an FOMC meeting in August and the next one is September 18th, a lot of people are going to hang on Jerome Powell's every word, right? Because we don't have a what do you call it? We don't have an FOMC meeting. Funny enough, I saw this on Benzinga, and you would think that Jackson Hole would be, you know, something that would be very market moving. Now, what's interesting is the last Jackson Hole, the market dropped by 1.4% in 2023. The Jackson Hole before that, the market dropped by 3.4%. This was when we had a bear market in 2022. And then the two before that were slightly positive. And then, you know, you go all the way back to 2014. And it looks like the average is a negative 0.4% day, which is kind of flat. And the median is actually 0%. Now, the S&P return for the entire week of Jackson Hole is usually positive. Meaning if you look at this entire week on the S&P 500, the average is even on the last year where we had a negative 1.4% day on Jackson Hole, the week still ended positive at 0.8%. So let's take a look at where we are now. If we look at the SPY real quick, it's crazy that the SPY is only down 1% from all-time highs with people panicking. But if you take a look at the SPY this week, the SPY is up 0.84%. And if you take a look at this month, the SPY is up 1.48%. Now, you recall me saying that August has been 100% a green month during an election year going back for 32 years, right? And everyone was panicking this month when the S&P dropped just a little bit. And now it's back to green for the entire month, right? So I personally think that what the market is expecting is they want to see whether Jerome Powell is going to give us an indication of how much they're going to cut rates by. So there's already 100% priced in expectation that the Fed cuts, but it's either 25 basis points, which right now is 71% likely based on how Fed funds futures speculators are betting, and a 28% likelihood that he cuts by 50 basis points. So we'll see in about 25 minutes. I wonder if there is a viable trade to take. Oh, 1 second. What is Jackson Hole? You can easily type that into Google instead of the chat. The Jackson Hole is a rich people's glory hole. That's what it is. If I'm at work when the webinar is there a way of rewatching? Yes. If you sign up, you will get the recording. Musica, what's going on? Nick, what's going on? Aisha, what's going on? Julio Cesar, what's going on? Vicolito, Kevin, Jeffrey, Sashin, what's going on, guys? All right. There's quite a bit of divergence between NQ, the NASDAQ, and ES. Let me just mark up my chart real quick. Wait. Oh, yeah, that's correct. Where's my midnight open? London should be around here somewhere. So that's London high and that's London low. We're at 830. What is ES doing? That's 830. And if you're wondering why I'm marking this up, if you're new, these are key levels, at least based on the way that I trade. Wow, midnight and 830 are so far away. Oh, and there's equal lows at midnight. So this is midnight, and this is London low. They're the same exact level. Interesting. Interesting. Oh, man, we already started getting donations. Hell yeah. Daryl Shipley donated $20 to St. Jude's. Appreciate you. Serrano Thank you, brother. Donated $20, St. Jude's. Thank you so much. All right. Wow, we have almost 1,000 people watching and 98 likes. You guys must not like me that much yet, but I will win you over. I promise. Go ahead and give this a thumbs up for real so that other people can find the stream. We don't want them watching, I don't know. Name your favorite YouTuber. Who don't we want the YouTube crowd watching? Who do you think gives terrible market information? Very curious. Wow, there is quite a bit of divergence here. NQ getting sandbagged at this fair value gap. ES looks like it wants to go up to highs. I should have opened this in ES. I was testing out a theory, not a theory, but I guess a setup based on a unicorn play on the daily, right? You have this bullish breaker and you have this fair value gap on the daily. So I actually took this trade, but instead of taking it in ES, I took it in MES, as you can see here. So MES is the micro. It's a 1/10 of ES. And, you know, sometimes I do this because if I have skin in the game, if I have money on the line, even if it's a little bit, then I'll remember what actually happened. So then when I size up and I start trading it for real, it's more seared in my brain, right? So if I took this in ES, it would be a $1,600 per contract position. But I took it in MES and I held this overnight. And so far the theory is correct. One other thing is I found data, and you guys know how much we obsess over data. We don't just trade willy-nilly. But I found some data here that was so interesting because it really flies in the face of what people think. So if I showed you this candle right here on ES, this one, the red one from yesterday, this is a bearish engulfing candle, no? You have this huge red candle that engulfs the previous two candles. So you're taught in textbooks that a bearish engulfing candle is what? Obviously bearish. Look at in 2024, right? We've had 9 bearish engulfing candles on the S&P 500 on the daily, right? The daily candles. We've had 9. 7 of those were green the next day. That's so wild. Because you're taught in textbooks that when you see this, you got to panic and moreover, maybe open up shorts because you're taught that a bearish engulfing is going to turn bearish the next day or the next following days. 78% of the time, the following day was green. That's fucking wild, right? And I knew that it wasn't reliable, but I didn't know to what extent, right? If we take a look at it since 1990, still 57% of the time, the next day is green. That's insane. That's over 169 bearish engulfing candles. And if we look at it since 2021, we've had 25 bearish engulfing on the daily. 63% have been green. Insane. We've had 40 bearish engulfing and 63% next day green. And since 1990, we've had almost 300 bearish engulfing, 57% next day green. But it's crazy just what happens when you look at data. Kathy Wood. Oh, yeah. Oh, you guys were saying who you don't want to watch. Wow, a lot of people saying anonymous. Whoever that was, appreciate you for donating 20 pounds to St. Jude. Thank you. The most common answer is meet Kevin and Stock Mo. Meet Kevin and Stock Mo. Let's see. Graham Stephan has a vote. Jim Cramer, I mean, that's a given, but we watch him to inverse him. It's important to watch Jim Cramer because it's data-driven analysis, but you have to do the opposite. You just have to do the opposite, but it's really good. It's really good data. But you just got to do the opposite. Graham Stephan's all right, bro. Graham Stephan's all right. I don't know. Like, I don't watch him a ton, but when I see him, I'm like, he doesn't give me grifter vibes. I don't think the information is that useful. Or, okay, it might be useful to the average Joe. I don't know. What does he say? Save your money, don't buy coffee, make your own coffee, don't buy avocado toast, invest in real estate, don't take out loans, use credit wisely. What does he say? At dollar cost average in the stock market. Like, that's shit that, like, I don't know. That's shit like a high school teacher can tell you. You know what I mean? Thoughts on everything money? Who's everything money? If it's a person that I'm talking about, I like that guy. One of the only people I like. If it's the person that I'm thinking about. Right now we're barcoding in preparation for Stockmo. Jerome Powell. How dare I? How dare I? I'd much rather watch Jay Powell. Let me see who Everything Money is. Everything Money.
What's up, intelligent investors? I'm your Uncle Paul.
Uncle, what the fuck is this?
And this is the Everything Money investing channel. Money is part of everyone's life from day one of birth.
Bro, this guy has got a headset. You know, like when you go to Costco and you see those people like doing demos on the blenders, like the Vitamix blenders, and they're doing a presentation, and they'll throw like grapes and ice cubes and bananas in there and make a smoothie like right in front of your face, but they're announcing the whole time and they're selling to you the whole time. That's what that little whack ass earpiece reminds me of. Like, why can't you just have a regular mic? Like, why you got to get this like clear salesman type earpiece headsets? Look, why can't you just get a regular mic? That already, I can't watch it. I can't watch it. I feel like I'm being sold a blender at Costco. No, that's not who I was talking about. This is not Everything Money is definitely not who I was talking about. I forgot what that guy's name is that I said that I actually like, but I thought it was Everything Money, but the channel name is different. Figuring Out Money. You guys are going to have me review all of the finance YouTubers. Maybe we should do that one day. Maybe we should just, yeah, this guy. I like this guy. I follow him on Twitter too. I think he has really good analysis, and I think it's honest. Yeah, Figuring Out Money. I like that dude. I don't know how good of a trader he is, so might be great, might not be. I don't even know if he trades versus invests only. I don't know. But I think his macro stuff is well thought out, and he's data-driven like me, even if we have different approaches. But I like that guy. Thoughts on Jeremy? Who the fuck is Jeremy? There's a guy that just goes by one name. Jeremy. Of course Pearl Jam will come up. I love this song. Classic song right here. Classic album. I don't know who Jeremy is. Lefebvre? The fuck? Who do you guys watch? Who's Lefebvre? Financial education. Oh, yeah. Anything but education. That's what that channel is. Should be called The Miseducation of Finance. That's what that channel should be called. Roach Capital? Okay. I don't know. I don't know what you guys have been watching. Half of these people I don't know, okay? So doesn't mean they're good or bad. I would be very tempted to short here. Just at least back to 8:30, just to scalp back to 8:30. But I won't. Paul Memphilly, John Markham Big Dog. Fuck you guys. All right? These aren't real people. You guys are just throwing random names out there. John Marco Big Dog. Ron Jeremy. Chris Brown. See? Now I can't even tell who's real and who's not. In the Money. You're thinking of In the Money? Me? No, I know In the Money. Wait, do I? See, all right, we are going to get to Jerome Powell in 8 minutes, but you guys are interested in my take on all these YouTubers. Who's In the Money? Oh no, this guy's all right. I remember him during the pandemic. I think he got sick or something. I don't mind this guy. I think he's all right. I don't watch him, but I think he's all right. Trader Tim. See, this sounds like a children's book. Trader Tim. Patrick Boyle. Oh, I've seen this guy. He actually works in finance. Yeah, I think his info is good. I've tried watching a couple of videos. I fall asleep watching him. But I think his info is whatever. Like it's basic shit. Felix and Friends. See. What the fuck is Felix and Friends? Watch, a cartoon is gonna come up. Who is this? Do you and Tom Nash block each other? Do we block each other? What does that mean? No, one time he blocked me on I don't care to block him. But one time he blocked me on Twitter because I don't know, he was crying about something political. And I had a different political take. And he got sensitive and blocked me. I don't know if I'm still blocked. I don't really care. Game of Trades. That's not a real channel, bro. That's fear porn right there. Game of Trades is not legit, dude. Game of Trades is how you go broke. Game of Trades is how you don't invest and you miss the entire rally by watching Game of Trades. And you guys don't even know. Here, you want me to show you? Because I'm the realest in the fucking game. I'm going to show you something. Hopefully YouTube doesn't ban me for showing you this. Because I know how sensitive they get. They get sensitive about YouTubers showing their analytics and all this shit. But I don't give a shit. I barely make money on YouTube anyway. Where can I find this? Okay, so CPM. Okay. This is how crazy finance CPM is. All right? Let me show this to you. If I get banned off YouTube, you'll know why. So here is cost per M is in French. It's the French word for 1,000. Me, okay? MILLE. So finance has some of the highest cost per 1,000 views, probably the highest. So if you have like makeup videos or travel videos, right? This is nothing. It's like $1. Finance videos, because the advertisers pay a lot to advertise on finance channels, right? It has the highest. So think of insurance companies, brokerages, etc. So the cost, what they pay per 1,000 views can range from like $10, but I've had as much as almost $28 per 1,000 views. Do you know how crazy that is for YouTube? $28 per 1,000 views. That's insane. Now, I don't make a ton of content and I don't get a ton of views, but my point is fear porn sells, right? So you look at Maverick of Wall Street, you look at Game of Trades. The fear porn sells, right? And clearly what they're doing is audience capture. So they take a look at their metrics and they're like, what makes the most money? Oh, when I talk about fear, that makes the most money? Yeah, let me keep doing that. Let me keep talking about fear because that makes the most money. They don't give a fuck about you or your portfolio or whether you missed 3 years of a bull market, right? Listening to that bullshit. They get finance has the highest CPM. So imagine someone like Game of Trades who gets 100,000 plus views per video. And you're talking about a $10 to $30 CPM. You can imagine how much they get paid, right? So they're getting thousands of dollars per video. You think they give a fuck if you missed buying QQQ or SPY or Microsoft or Google? You think they care? No. So hopefully I don't get banned for showing you this, but I told you, realist in the game. All right. Does CNBC have it before YouTube? Let's see which one comes on first. Okay, they just started this shit.
My name is Karen Dinan, and I'm going to be your moderator for today's sessions. As you heard last night from Jeff, the topic for the symposium is reassessing the effectiveness and transmission of monetary policy. So it's a super important topic, particularly right now. And we've got some great papers lined up for this morning. We've got 2 papers, and we also have a panel lined up for that.
The chairman, he says, with an appropriate dialing back
before we get to any of that,
there's good reason to think the economy will get back to 2% while maintaining a strong labor market. Let's listen to the chairman.
Our objective has been to restore price stability while maintaining a strong labor market, avoiding the sharp increases in unemployment that characterized earlier disinflationary episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low. So let's begin with the current situation and the near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so. Prior to this episode, most Americans alive today had not experienced the pain of high inflation for a sustained period. Inflation brought substantial hardship, especially for those least able to meet the higher costs of essentials, like food, housing, and transportation. High inflation triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions. Low unemployment, high participation, historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%, still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. The hiring and quits rates are now below the levels that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss, and this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns over COVID weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its pre-pandemic trend until mid-2023. Supply chains were snarled by a combination of lost workers, disrupted international trade linkages, and tectonic shifts in the composition and level of demand. Clearly, this was nothing like the slow recovery after the global financial crisis. Enter inflation. After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based, with extremely large price increases for goods in short supply, such as motor vehicles. My colleagues and I judged at the outset that these pandemic-related factors would not be persistent, and thus that the sudden rise in inflation was likely to pass through fairly quickly without the need for a monetary policy response. In short, that the inflation would be transitory. Standard thinking has long been that, as long as inflation expectations remain well anchored, it can be appropriate for central banks to look through a temporary rise in inflation. The good ship transitory was a crowded one, with most mainstream analysts and advanced economy central bankers on board. I think I see some former shipmates out there today. The common expectation was that supply conditions would improve reasonably quickly, that the rapid recovery in demand would run its course, and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected in our communications. And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, And after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. Higher rates of inflation were a global phenomenon, reflecting common experiences: rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs from the middle of 2021. This increase in labor demand was met in part by workers rejoining the labor force as health concerns began to fade. But labor supply remained constrained, and in the summer of 2022, labor force participation remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through the end of the year, signaling a severe labor shortage, and inflation peaked at 7.1% in June 2022. At this podium 2 years ago, I discussed the possibility that addressing inflation could bring some pain in the form of higher unemployment and slower growth. Some argued that getting inflation under control would require a recession and a lengthy period of high unemployment, and I expressed our unconditional commitment to fully restoring price stability and to keeping at it until the job is done. The FOMC did not flinch from carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring price stability. We raised our policy rate by 425 basis points in 2022 and another 100 basis points in 2023, and we've held our policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated, the historically high level of vacancies relative to unemployment has normalized primarily through a decline in vacancies, without sizable and disruptive layoffs, bringing the labor market to a state where it is no longer a source of inflationary pressures. A word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation expectations are anchored at our objective. That's what the model said. But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations, which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review every 5 years. As we begin this process later this year, we will be open to criticism and new ideas while preserving the strengths of our framework. The limits of our knowledge, so clearly evident during the pandemic, demand humility and a questioning spirit focused on learning lessons from the past and applying them flexibly to our current challenges. Thank you.
Sadly, no Q&A at Jackson Hole, but that was the Fed chair in, I would say, a classic Jay Powell speech. It was brief, direct, signaled a policy change, had a little humor in it. The money line, the time has come for policy to adjust. Those were the magic words. The market likes what it heard. The market likes to be validated on this view that the Fed is about to start cutting rates. And what Powell said about that is that the time has come for policy to adjust. The direction of travel is clear, he says. The timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. So as expected, no real specificity on the size of rate cuts or the pace of rate cuts. He can't do that right now, but he did affirm the market's view, and I would say added a little more on the inflation front, that inflation is becoming less of a problem. He says, my confidence has grown that inflation is on a sustainable path to 2%. On employment, he says it seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. So again, not as worried about inflation. We do not seek or welcome further cooling in labor market conditions. Guys, overall, I would say a pretty dovish speech from the Fed chair, as dovish as he can get at this point without knowing the next jobs report or exactly how much they want to ease or what it's going to look like. Clearly, he's moved in the market's direction, and the market likes that.
Anything surprise you?
Not really.
Okay.
I would say that, you know, look, he went through an exhaustive, most of the speech was about why inflation, why we've had inflation in recent years. Everything from why he thought it was transitory, and he made a little joke about a lot of folks were on that transitory boat with him. It wasn't just him, and a lot of them in the audience as well. He talked about supply shocks. He talked about the war in Ukraine. He talked about a very tight labor market. He talked about demand increasing, and he talked about why the policy worked. You know, interestingly, guys, he did not talk about greedflation. He did not talk about corporations unnecessarily.
So, yeah, I have to agree there that his speech was as dovish as we expected it to be, right? So, guys, for those of you that are asking, so sell, should I buy? Do me a favor, like, exit the market, all right? Don't even consider trading. Like, when you're trading, you have to be patient, right? You have to look for your setups. You're not looking to quickly press sell or quickly press buy, right? It does get kind of annoying that with every word, or, you know, someone might type something in the chat, or I might say something, or Jerome Powell might say something, and quickly the question is, so should I buy? Should I sell? Should I buy? Should I sell? Like, learn how to trade. Take the time to learn and find your setup, okay? You're not trying to click buy or sell depending on what happens immediately. Anyway. So based on what Jerome Powell said, it is crazy that he is that was as dovish as you've ever heard Jerome Powell, right? So not only did he say that we don't expect inflation to be a problem, that we have pretty much are seeing the effects of inflation going down the way we want, that, you know, we don't expect sudden inflation to kick back up. But then he also said we're not looking for the unemployment market or for the employment market to cool further, meaning that they're afraid. They're afraid that if they keep rates where they are, that unemployment is going to take such a big hit and throw us into a recession. So all that is to say that he said we're going to cut in September without saying the words, we are going to cut in September. But he even said something to the effect of, if you guys recall in the beginning of the speech, he said that what did he say? He said we are not looking for further monetary policy, something like that, right? Or our monetary tightening is coming to an end, something like that, right? If you guys have the exact quote, let me know. But you've never heard Jerome Powell talk that definitively about what they're going to do, right? And that was as definitive and as conclusive as you've ever heard the Fed. And they are definitely cutting in September. The question is, do they cut 50 basis points or 25? And I truly believe that he doesn't know yet, because on September 11th, we have CPI. I want to see if we can short from here. Wait, do we have any other news? Let me make sure. New home sales came out much higher than expected as well while he was speaking. 739,000 versus expected 624,000. And yesterday, existing home sales came out higher than expected. We have some Fed clown talking at 11. Harker. But that's really it. Whoops. I wonder if ES gets hamstrung here. So there's bearish divergence between ES and NQ. If you look at the 4-hour, ES made a higher high and NQ is making a lower high in that 4-hour fair value gap. I think we take out these equal highs here. Let's see. These are the data highs, and we have equal highs up here. So this right here is SMT. Do we take out these equal highs that also represent the data highs? I think we take out those data highs. Wow, Tesla's on a tear today. It's up $10 a share today. We shouldn't hear your food digest. Who are you talking to? Okay. We took out the highs as suspected. Who are you talking to? Oh yeah, Dominique. Thank you so much, Dominique, for the Jerome Powell line where he said the time has come for policy to adjust. Yeah, that's exactly what I was talking about. Okay, we took out equal highs on NQ and ES didn't. So not only do we have a larger bearish divergence, but if ES does not take out this 10 a.m. high, there might be a short in the works. So I'm going to be monitoring this. I'm actually going to set an alert here. I'm going along on Tesla. Why? I mean, it's up $10 today. Why didn't you do it yesterday? I'm just curious. I think NQ. If ES does not take this 10 a.m. high, then I think there's a short-term short. To maybe at least half of this range. The difference is negligible. It's 5%. That's not negligible, dude. This is why, like, trading has you jaded. That's not negligible. If you expect an average of 10% a year gain on the stock market, 5% is half of that. And that was the difference between yesterday and today. So, no, not negligible at all. I expect Tesla to double in 9 months. Cool. Hey. I think we get a short-term short here. On NQ. To at least that level right there. The 0.5 level, but at least that level. All this is based on ES not taking that 10 a.m. high, but NQ taking it. Let's see what happens here. But there's a 2-to-1. Actually, yeah, if we close above this, nice. Let's flush that. Beautiful. I want to see it get down to at least that 0.5. If it, I don't want it to get hamstrung here. I want to see it close below that. But both ES and NQ are getting held up here. Now, mind you, I'm not bearish on the day. This is just a short-term short based on ES not taking out that 10 a.m. high. It's a good sign if it closes below this. Up almost 600 on this position. But this is still a roadblock here. We want it to close below this 1 minute gap. Like I said, I'm not bearish on the day. It's just a short-term short. I would like to squeeze more out of this. Obviously, I can close it for 600, but I would like to squeeze more out of this. To at least that 0.5, which is at 19,805. That would give me the 2-to-1. And I really don't want to break even. But I might set my stop to break even here. Actually, I'm going to set my stop to break even. But I really want to get to there. ES is definitely holding up here. So we need to bypass this. Beautiful. Beautiful. Come on, give it to me. Oh, beautiful. Booked 900 on that. Got to our target. Got to our 0.5 target. Like I said, I'm not bearish on the day. But I did have a short-term bearish play. Hell yeah. Now, the reason that the 0.5 is significant, it's half of the range of the day, right? The day is still very bullish so far. But the thesis for the trade was that we have bearish SMT here, right? NQ making a lower high. If you see on the 4-hour, ES made a higher high. And then we did have SMT on the lower time frame where opposite to that, ES made a lower high and NQ made a higher high. Then we had the relative equal highs here from the 10 a.m. candles, right? When Powell was speaking, we swept that on NQ. On ES, we didn't, right? So then I just waited for NQ to close below this inverted gap and come back up to retest it, and that's where I took it. And if I can find the 2-to-1, which I did, I got more than 2-to-1 at the 0.5 of the range, then, you know, I only need to play for a piece of it. So did that, ended up getting 900 per contract on that play. And the reason I did 0.5 of the range is because when you see on a trending day, a lot of times if there is so say like on a trending up day like today so far, right? Especially if there's news, you see that the retracement lasts to at least half of the daily range, which is why I had the half mark pointed out. I think a mistake a lot of people make is on a trending day, if you see action like this, then they'll just short it and assume that they're going to get a broad short and that the day turns red, which could happen. But again, when you're trading, you're not trying to guess. You're just trying to get a piece of the price action when it's confirmed. So all of that confluence confirmed the price action for me. And I just need to grab a piece of what the price action is telling me. I'm not trying to guess what the price action is going to do. It already showed me its hand. And now I just need to play a realistic range to try to get a piece of it. Does that make sense? If you guys want to trade live with me every day, click the link in the description. A lot of you, I recognize the name. You are already you're already in the Discord. But if you want to trade live with me every day, I do this every day, but to a much smaller group, because I would go crazy if I did this on YouTube every day. And make sure you sign up for the free webinar on September 1st. It's the first link in the chat here. It's the pinned link in the chat. Jasmine, what's going on? Jasmine's in the Discord. You paper-handed it? Why? Fabrizio, thank you so much for your donation to St. Jude's. Appreciate it. And you can see here we're seeing, you know, a lot of consolidation at the 0.5. That's because the 0.5 is a significant level. So just grab a fib tool and measure the daily range, just the low since the open and the high since the open. And 0.5 is the same as the 0.5 on the fib. It's just half of the daily range. And that can, if you can get a 2-to-1 at that target, see, even ES hit 0.5. If you can get a 2-to-1 at that target, then it's usually realistic if everything else confirms for you. Jasmine June says, I'm in the Discord too. Lisa Dempsey, what's going on? Nathan, what's going on? Umair Asif, what's going on? Took some of micros. That short almost caught the whole move. Yeah. I took that in real money, which is awesome. Inspire Mindset. Thank you so much, man, for your donation to St. Jude. Christian, also in the Discord. What's going on, man? I never knew your name was Christian. I recognize the profile pic. Making it impossible to take your trade? I don't think that's the case. A lot of people took the trade, but also the trade sat here for 2 to 3 minutes from the range that I took it. But I tried to draw it out ahead of time for you. This is why you need to join the Discord, because there's no lag. It's on a Zoom call. Juan, what's going on, bro? Thank you so much for your donation, dude. Thank you. T Black donated $20. Holy shit. I assume a lot of these are from you guys taking the trade. Thank you guys so much. Chancellor says, same my first day on a live account today. Hell yeah. Nardos. I missed that trade. I mean, but you're now a rock star. You can take your own trades. The live trade every day in the link, does it include live stream chart like this? Yeah, I trade live every day. Where would you start if you were new? Google, bro. Start on Google. I mean, that's like asking how do you fly a plane? Like, eventually you're going to have to start researching how to fly a plane. So, you know, I'll be honest, like, and I like you, but I'll be honest, that is one of the most annoying questions. Like, everything I've ever learned in life, how to play guitar, how to snowboard, how to trade, how to install memory in your computer, how to shoot a jump shot, you know, how to chip a ball in soccer. Like, everything I've ever learned, I've learned online. It's like asking how do you learn is crazy to me in this day and age, especially for you youngsters. It's just wild to me that you wouldn't just start obsessively and rapidly looking. How do you trade? How do you chart? Technical analysis, ICT, whatever it is that you want to learn, right? How do you evaluate a company? It's crazy to me that people wouldn't do that. Like, I've been obsessed about many things in life, right? I have a very obsessive personality, which helps when trading. But I have a very obsessive personality. There's nothing that's going to stop me from learning something that I want to learn. And asking how to learn it is crazy to me. It's just like you just start, and it will take you down the rabbit hole. And if I'm being honest, if you want to learn how to trade and you're watching me and you want to learn how to do exactly this, I have many resources, whether it's the free videos or you sign up to the Discord, which probably the quickest way to learn because we're actually trading in there. And we're all trading in a very similar fashion. Or you sign up to the free mastermind that's coming up on September 1st, which is the first link in the chat. I mean, the resources are endless. So I don't know, bro. I don't know how to teach people to be obsessive. A lot of people are, and a lot of people aren't. That's all I could tell you. Anonymous, whoever that was, appreciate your donation to St. Jude's. Thank you so much. Ingrid, thank you so much for your donation to St. Jude's as well. Thank you so much. Wow, could have traded for a lot more. Let's see if we can catch a long after this. So we're now below midnight. We caught a really nice piece of the move. But we're now below midnight on NQ. Did we get there on ES? Not yet. Man, I should have bought VIX puts. I was thinking about that yesterday. Let's see if I can catch a second trade here. Boobies included? So what the fuck are you get? What are you talking about? Like, what the fuck are you talking about? Rome, what's going on, bro? The guy wants to know how to join your Discord? No, he knows how to join the Discord. He's not a first timer. He follows me on Twitter too. But it's the first link in the description if you want to join it. All right, so we retraced to below 830, which is an important level, which is why you saw me draw it out earlier. See if we can get a close above this 1 minute fair value gap. We took out midnight on NQ. We also took out London. Did ES take out London? No, senor. No, because midnight and London are equal lows on ES. That's right. I wonder if we do this to take that level out first. Let's monitor this. Are you at 100% win rate on these YouTube lives? Fuck, man. I might be. No lie, I might be. I'm not just saying that. Romeezy, what's going on? I might be. Honestly. Obviously, I've been going live for years, so I'm sure I'm not. But if you're talking about this year, probably. I did take an L on live stream in the Discord yesterday, though. That was my first L of August. I ended the day green because one of our analysts had sent out a trade towards the end of the day that I really liked, and I ended up taking his trade as well, and then that put me green on the day. But me personally, I took an L on live stream yesterday, just in full transparency. I know it's like it kind of jades people to see, wins all the time. But honestly, like, a really good trader can lose 60% of his or her trades. And if the risk management is on point, be a profitable trader. Now, luckily, the win rate, and I trade live in front of you guys, so you can obviously corroborate this, but the win rate seems to be much higher than 60%. But the reason me bringing up that 60% is that I think people get jaded, right? They start crying like a baby when they take one loss, and it's like, no, dude. Losses are part of the game. It's just, one, can you keep your losses small? And two, do you go on tilt, or can you contextualize those losses to where it just, flies off your shoulder like dust and doesn't affect you for the next trade? That's really it. But that's the thing, I think, and losing sucks, right? But I think what separates great traders from not is that most people cry like a fucking baby when they lose, and they start whining about it. Oh my God, why did I take a loss? And, like yesterday, like I said, I took a loss, $230 per contract, which is small. Obviously, I'm, aiming for 2-to-1 on the wins. So my losses are small. And some dude was crying yesterday, like, oh, why did we lose? Why did we lose? It's like, you can't expect to succeed at trading if that's how you are. And that's fine. But either change it or stop trading. You can't whine like a bitch off of one loss. That's just crazy to me. I understand it because I was there before. So I try not to knock it too hard, especially if I see someone, continuously making progress and they're on the way to getting out of that mindset. But you cannot stay in that mindset for the rest of your life and expect to be a good trader. You just can't. That's just crazy. So get that out of your system as fast as possible. One loss doesn't mean shit. It just means you're trading. That's all it means. Losses are the tuition. Not even that. Honestly, not even that. Losses are just a statistical fact. Even if you're trading A+ every trade, losses are just a statistical fact. Like yesterday, my trade yesterday, granted it wasn't A+, but it wasn't terrible. It's just sometimes your setup is not going to work out, and that's a statistical anomaly. That doesn't mean you start changing everything and then, going on YouTube to try to find a new strategy and then crying to your wife or your husband about it. And, I can't believe I took a loss today. Oh my God. Can you believe I took a loss today? Yeah, motherfucker, you're trading. That's how the business goes. Imagine if you were like a car salesman and you cried every time someone didn't buy a car from you, and you just stopped selling cars because of it. Like, that's wild, right? View it as the same thing. What are your aggregate results? If you stuck to your plan and you didn't exaggerate your losses, probably pretty good. If you're a 6 out of 10, 7 out of 10 trader, 2-to-1 risk to reward, you're a highly profitable trader. So who cares about those 3 or 4 losses out of 10? It's nothing, man. Changing frames. Holy hell, bro. Thank you so much for your donation to St. Jude's. Olarin Istari, hopefully I'm saying your name correctly. Thank you so much for your donation to St. Jude's. Man, you guys are blessing the Children's Hospital today. And shout out to Tanya. I saw that she started doing this too. That's the reason that you know, I don't really talk about money that I donated or whatever, but once in a blue moon, I will make a mention of it, because if it inspires other people who are blessed enough to, you know, trade for a living or do business online for a living, if it, you know, inspires them to then donate as well, then we did something good. I definitely don't ever do it to try and flex. So, you know, I started doing these St. Jude donations in 2021. So for 3 years now, I haven't taken a dime off of live streams. And it always feels weird when people, you know, would super chat me or send me money on the live streams. I'm like, dude, I just hit like $1,000 trade. I don't need the $5. I appreciate it, but I don't need it. So, you know, when YouTube came out with that fundraising thing, I was like, hell yeah. So I just saw that Tanya Trades is doing that as well, to St. Jude's as well, I believe. Anonymous, thank you so much for your donation. 10 pounds to St. Jude's. Thank you so much. Bobby, what's going on? Kenobi, what's going on, bro? Made 6K yesterday, minus 496 today. I think I'm doing pretty good. Yeah, I would say that's pretty good. Wish to meet you when you visit Singapore. Yes, I plan on coming to Singapore for sure. A really, really, really good friend of mine lives in Singapore too. Wow, there are almost 9,000 people joined. Guys, hit that thumbs up so that other people find this stream. I'm looking at a long here potentially. We can't close above this. I can't take it long. I can't take it long if we can't close above that. ES did, but NQ didn't. So that's why it's important to look at both. You see that? How NQ was sandbagged at this fair value gap, but ES closed above it. ES looks bullish. I'm not going to lie. If I was just looking at ES, this looks bullish. But NQ is giving me vibes, man. Teuz says, to be honest, you're one of the best traders on YouTube. One of the best? Come on, bro. Why not the best? I would like to know who else is up there. Yeah, actually, you know what? Who else is up there? I'm honestly like, whoever you like. It's amazing. But I'm just curious. Who do you think is also up there in terms of trading? I don't know who Peter D is. We're talking live traders here, right? Okay, you guys are just messing around. Paul H says, because you are not, exclamation mark. Paul H sounds like his mother didn't like him when he was a child. It's all right, Paul H. I'm just saying. Who else you like? Don't take out the aggression that you have on your mom. Don't take it out on me, bro. I just asked who you liked. Oh, Danny says you are the best for sure. I appreciate you. Sorry for the insult. Different style, but Josh answers. Okay, I have no idea who that is. Peter DiCarlo? I don't know who that is. Q Banks. I know who that is. I've never seen him trade live. Nancy Pelosi, agree. Greatest trader of all time. Chris Sane, stop it. Also not a live trader. Brett Simba, who the fuck is that? TJR and Justin Werlin. I think I know who Justin Werlin is. Seems like a good kid. Never seen him trade live. That missed up, Z? What did I say? Stocks with Josh? I'm talking about live traders, guys. I'm not saying who's like your favorite YouTuber. I'm talking about someone who actually like goes on stream and starts trading. You know what's so funny about Carmine Rosado? Vincent Desiano. I think I know who that is. One of the old school YouTube guys, I think. I'm gonna look it up to see if that's who I'm thinking about. But Carmine Rosado is so funny, man, because I remember back in the days of pandemic YouTube, people would ask me like, "Oh, who else do you like? Who else do you watch?" And Carmine Rosado had like 20K subscribers. And I think our channel had already hit 100. But something popped up and I was watching his stuff. I'm like, you know what? This guy's got some pretty good content. Like, we don't trade the same style for sure. But he only had 20K subscribers, and I think now he's got like 140, something like that. And I'm like, man, it's awesome to see someone, because YouTube, man, for most people, is slow growth, right? And they stick to it. Most people don't stick to it, but the ones that do, like, they'll see that slow growth. So, you know, it's awesome to see, like, 3-4 years ago he was at 20K and now he's at like 140. Kenon Grace, stop it, bro. Vincent is great. Okay, a couple of you had said Vincent, so I'm gonna check out his stuff because I'm not familiar with his live trades. Umar makes money because his account is big. I don't think he live trades. But you have to respect what he's done in this space. For sure. I mean, he's definitely one of the GOATs. But I don't think he, I was just talking about in terms of like live trading. Not, you know, trading at home and then, you know, posting it. I mean, like, actually having to take entries and stuff live. It's a different game, and I applaud anyone who can do it, for sure. the hate is real. I don't hate nobody, bro. Who do I hate? Daniel Inskeep? I don't think he's a trader either. I think he's, I think he dabbles and he makes really good YouTube content. And he'll do experiments and stuff, trying to get funded or whatever. But I don't think he's like an actual trader. Because he'll make YouTube vids about, I don't know, walking dogs and other types of side hustles. But his content, I mean, I wish I knew how to make YouTube videos like that. His content's good. Man, this is we caught the biggest move of the day so far, which was this down move. And I'm looking to see if we're still short biased on the day. Because here's the thing, right? Like when in doubt, go to the high time frame. And assess, right? And on the high time frame, like I said, we have that bearish SMT. We have this 4-hour fair value gap. But we're still green on the day, right? But if you look at the daily, yesterday we swept the previous day and then closed below. So you would expect to have a more bearish bias today. But I don't know that we get another big move to the downside. The only thing that I would look to target so far is on ES. We didn't take out, as I said, we didn't take out midnight or London, which is down here. So I think there could be another short to get to that level. Is that it? Fuck me, that's it, isn't it? I wish this happened 10 minutes ago. During the 1050 macro. But this is what I'd be looking at here. For those guys who are not in in the mastermind, click the first link in the description. I'm doing a free trading webinar on September 1st. So if you ever had questions about how to do technical analysis, why I look at 8:30 and midnight, how do I know whether the market's going to go up or down? How do I enter trades? How do I set my risk reward ratio? All that stuff. Doing a free webinar September 1st at 12 p.m. Eastern. Only 1,000 spots open. Once they're gone, right? So make sure that you secure your spot. It's absolutely free. Just, I ask that if you do click that and register, make sure that you actually join. on September 1st, which is a week from this Sunday. So not this Sunday, but a week from that. It's the first link in the chat box. And if you want to trade live with me every day, you will find that link below in the description. This is so interesting. Fuck, NQ is so weak compared to EF. NQ is so weak compared to ES. If you're just joining, we already took a short on the day, played this move here. Didn't grab it all the way down. I exited on NQ. It was at the 50% mark of this entire range. And now I'm looking for another trade. You'll see it on the replay, Neil. I went over it in a lot of detail. I went over the trade in a lot of detail. What are your thoughts on Trader Tom? Dude, Trader Tom, Trader Tim, I don't... Who are these people that have, like, children's book style names? Let me see. Who the fuck is Trader Tom? I don't know who that is. Who is this guy? What? Dude, okay, you cannot introduce this guy as Trader Tom. You know who this is? Do you know who Tom Hugard is? He wrote one of my favorite books on trading of all time. When you say Trader Tom, no, put some respect on this guy's name. It's like me telling you, hey, have you seen Michael's channel on how to play basketball? And then I pull up the channel and it's fucking Michael Jordan's YouTube. Dude, it's not Trader Tom. His name is Tom Hugard. This guy wrote The Best Loser Wins, which is the best book ever on trading. Fucking Trader Tom. Put some damn respect on this guy's name. I didn't even know he has a YouTube channel. I'm going to subscribe to it right now. Thank you for showing me that he has a YouTube channel. I would not have known that if you didn't call him Trader Tom. So I appreciate it. I subscribe to him. Yes, I respect the hell out of this guy. What's interesting is people ran him off Twitter because they were like mean to him. And he thought Twitter was just so toxic. So then he's like, fuck Twitter. I'm out. Thank you so much. Full code. Appreciate it. Thank you for the kind words. I really mean it. Thank you. I heard he stopped live trading. I don't know if he stopped live trading. I think he deleted his Twitter and then he had that free Telegram where he would send out live trade ideas. And he didn't charge money, and people were, all of a sudden, they turned on him like a bunch of ungrateful minions. And I definitely know what that's like, but I'm not a legend like him. I mean, he's, you know, he's considered a titan, at least in the publishing space of trading, right? One day I will write a book, I promise. And it will be called Don't Be an Ape. How to Overcome Your Nature When Trading. There you go. I just made up that title spontaneously. So that has to be the title. One day I'll write a book. But The glaze is in full effect. Bro, I'm propping up some guy who I respect. What is up with this Chris Cash guy? Chris Cash got butthurt because someone told him that the person that he likes to watch trading is ass or something. All of a sudden, he's butthurt and emotional. And because I'm talking about Tom Hugard, he now says the glaze is in full effect. No, bro, go watch. Who do you watch? Meet Kevin? Go watch Meet Kevin. Yes. More respectful than Tom Hugard. Or whoever the hell you were butthurt about. That guy didn't like your trader. Crazy, man. It's so emotional. I can't remember who. He mentioned a name and someone told him that guy was ass. And now he's all butthurt talking about glazing. All right, so what I'm looking at right now is the fact that ES is showing so much more strength than NQ. Was there a long here? The reason that I didn't long here is because my target, I didn't have a big target, right? So I like to take asymmetrical trades where I have like a 2-to-1 advantage at least. And if I did take a long here, I don't have a target that would give me a surefire 2-to-1. So, you know, if you're a scalper, great. Ooh, I actually wonder if there's a short here. Hold on. So the fact that NQ is still blocked in this fair value gap, right? Yeah. The fact that NQ is still blocked in this fair value gap and ES isn't, but ES came up here and tagged this. We now have bearish divergence once again, and I think we go back down. And hopefully ES can take out that midnight low right there. Crude oil, I'll look at crude. Yeah, I'll look at crude. Steven Sedgwick says, I'm more impressed you know what glazing is because I had no idea what it is. I don't know, bro. I hear what all the... I don't know. I spend too much time on Twitter, I guess. So people use those words. It is kind of a whack term, I'll be honest. Glazing. I prefer ball fondling, but the kids say glazing. I think there's a short here, guys. I think there's a short here. NQ is still in that 5-minute gap. ES closed above it, but it hit the 2-minute gap here. Is this a short? I'm thinking about taking this, guys. It's an easy 2-to-1. But did we close below the fair value gap definitively? And what is NQ doing? Let's see if I want to take this. I would like to see a reaction here first. Like that. Let me see something real quick. Oh, yeah. The divergence is real here. NQ made a lower high. ES made a higher high. I think we can get a 2-to-1 out of this. But I wonder if ES makes it up here the same way, or NQ makes it up here the same way ES has. What time is it? 11:25. Not my favorite trade. I don't really like trading outside of the macros. But I'm going to take a stab here. What is this? Do I? Yeah, I don't like this consolidation. I mean, it is 11:26. If it was closer to 11:50, I might entertain it here. I mean, we'd still have bearish divergence even if NQ went for this. Nice. I don't know how much we can squeeze out of this though. I think it's just a short-term short to here. We have a bullish unicorn. So you have the 830 open. You have the fair value gap, and you have the breaker. I might go long from here. You have the same setup on ES. And remember, ES did not take out those 10 a.m. highs from Jerome Powell's speech, which it might eventually want. So I'm thinking about whoops. What are you guys saying? What are you clowning on now? What's the 8, 30, and 12 you keep mentioning? Join the free webinar. I'll tell you. In that case, never seen any of these guys do it live. Bro, rewind the fucking tape. I don't know. I'm not even going to waste my time. Whatever. Yeah, you're right. I don't trade live. You're right. That's why you're here. Low volume looks strong to the upside. I don't trade off of volume. Close your short, you'll be sorry. Nobody's short, dude. What the hell, man? People are on drugs. Sometimes I can't believe people are like this. I don't know. I'll be nice. Sometimes I can't believe people are like that. Let's just say that. Can you please record live webinar and share it in the Discord? Amir, nobody is short, dude. That short was so long ago. Don't take anyone's advice. Why is this guy here? Wait, are you a troll? I can't remember if you're one of the nice ones or you're a troll. Let me see. Oh, I remember this idiot. This guy told me that he didn't like my haircut. And I remember I wasted time looking up. I don't know. I'm not going to waste any time now, but his channel's name is Pottery Pants, okay? I'm just saying. Pottery Pants. It's telling you, close your short. Pottery Pants says, you'll be sorry. Bro, how about you go find some real pants made of cotton, maybe denim, even corduroy. Wearing pottery for pants, you probably would leave the house looking like a clown. But this guy, Pottery Pants, tells you to close your short that doesn't even exist. So make sure you listen to him. He wears pottery for pants, guys. I'm looking at a long here. So it's this exact setup. I don't like the time because typically I don't trade during lunch. And lunch is in about 25 minutes. So I want to see if this gives it to us before lunch. If so, I think there's a long here. NQ has a very similar. NQ has a very similar setup. It has like a double breaker. Wild. How often are you online? Every day. Not here. You crazy? They'll send me to fucking Arkham Asylum if I'm here every day. Dealing with Pottery Pants. But I go live in the Discord every day. Pottery Pants gets proper glazed. Ah, fuck. Any current setups for IWM? It's up 3.3%, dude. You mean for day trading? No. For swing trading, I think the opportunity passed you by a while ago. And also August 5th is when I put out a ton of buys in the Discord. And August 5th was the day to buy. The day that everyone told you was the day that Japan was going to go south or something. Since that day, IWM is up a whopping 13%. My initial buys on IWM, I mean, I'll find her for you. Oh, and I just put out my analysis for bonds yesterday, which I think is the next biggest opportunity for 2025. I put that out yesterday, but IWM. Okay, here's where I bought IWM. November 10th, 2023, which was on this chart right here. That's when I bought IWM. November 10th, 2003. It pays to buy the fear. Back then, everyone was saying small caps are dead. This is the worst small cap market ever. Anytime you hear fearful shit, that's probably when you should buy. Just like here. Small caps are dead. I can't believe they tricked everyone into buying small caps. 13% in 2 weeks. That's crazy. In terms of day trading, no. I don't think there is even a day trading setup. It's just up. So IWM or the Russell 2000 is not something that I have my eye on today. Crude oil. What is this box here? Completed the market maker sell model and looks like we're entering a buy model. I would say crude oil is a buy on retracements. I think it continues back to that 78 level in the next couple weeks or so. But in terms of a day trade, I don't see anything apparent that I like. I have like 100 followers. Yeah, dog, because you're telling people to wear pants made of clay. The fuck wants to do that? I think gold continues to make highs as the yields and the dollar drop. So not only do you have Japan threatening to raise rates, but obviously we're on the verge of cutting rates. I think gold will make a new high. In terms of a day trade, not interested in it. The only thing right now I'm interested in, besides the short that I took on NQ that I closed, the only thing I'm interested in was a long on ES from here, but it didn't get to my entry. So, oh well. If ES takes out, if the S&P 500 takes out that 10 a.m. high, then I'll reassess from there. Possible rate cut used to mean a Fed panic, but it seems rate cut could be bullish now. Yes, because nothing changes sentiment like price. You're looking at today. And what? Somehow foretelling how the market will act in a month when the Fed cuts rates. Of course, the lead up to the cut is bullish. Here, I did a whole write-up on this, guys. This is what I said. See, it's like if you were already a part of the Discord, you wouldn't have to ask such myopic questions. The first Fed cut leading into a recession has always caused the market to drop. Why? It's priced in. If the market is rallying based on reliable information that the Fed is going to cut rates, then it has already front-loaded the actual effects of the rate cut. Do you understand how the market works? If I know what I know today, then I'm going to act like it's already happened. If I tell you right now, right? If I tell you right now, Tesla, I know that Tesla's launching Robotaxi in October. They're not just going to talk about it. They're launching their first Robotaxi product. It's been a surprise for so long, but I can tell you right now that Tesla is launching in October, right? If I have information like that, what are you going to do? You're going to go out and buy the stock. You're not going to wait until October and then buy the stock, right? If Nancy Pelosi gave you insider info right now on something, you would go out and act upon it now, which means that the effects of that thing happening are being front-loaded now. So the reason that a Fed cut is bearish when it happens is because, just like Jerome told you today, he thinks that policy is coming to an end, right? He doesn't want unemployment to go higher. He thinks that the war on inflation is being won. So he's telling you that they're going to cut in September. So what happens today? What happens today is what people are expecting to happen after a rate cut. Does that make sense? That's why when the rate cut actually happens, it's profit taking, but all the dum-dums and bozos will buy on the first day of the rate cut, whereas people that have been paying attention to what's happening are front loading that expectation. That's why sell the news effect happens, if that makes sense. We are getting very near lunch. I do like this trade, whether I take it or not. I'm up quite a bit today from the earlier trade. I personally don't trade lunch. I like the setup, but I personally don't trade lunch. So I probably will not take this trade. And if I take another trade, it will be in the PM session. If you want to trade with me and you're not yet part of the Discord, make sure you sign up below. I go live every day. If you want to learn how to trade for free, sign up to that webinar. I'm very curious what happened here. Do I take this? This is an A+ setup. I just don't like the time. You saw the pullback on gold? Yeah, see the time is suboptimal to me. Even though that breaker is still in play, by the way. Let's see how this looks on the 1 minute. Oh, on the 1 minute, might be off of this BPR. I don't know. I made a good amount of money. I just want to protect my capital, but I'm looking at this because I'm curious, not because I'm in the trade. I'm super, super curious here. NQ back at London. Yeah, there's a lot of levels here to support a long. I just don't like the time. I mean, now that the risk is a lot smaller than when the entry was on the 5 minute, I like this more because it's only a $200 stop. Yeah, I like this more. We just need to get above this breaker. Oh, hell yeah. One of our analysts sent this out already. Yeah, that same trade exists on NQ. Let me see what the risk profile is here. Hold on. Wow, this is like almost a 5-to-1 trade if it gets up there. Yeah, I like this trade. 1150, we might see it get up to these highs. Let's see. Yeah, I think we get up to these highs. Let's see. Ugh, these equal lows at London on NQ. Piece of shit. They exist on ES too. We need to get above this to show strength. Otherwise, we might target those equal lows. Just smash that short on ES. What short? Oh, on the way down? Oh, yeah, that's awesome. I took it in MES. Omar says don't take it, but do take it. We need to go, cross above this hump. Otherwise, I think these equal lows get taken out. Yeah, I think NQ might want these equal lows more than ES. I don't know. Let's see. Let's see which one takes them out first. My suspicion is that one of them will take out these lows and one of them won't. That's my suspicion. It's 11:50, 10 minutes to lunch. Okay. I think one of them will take out these lows. Okay, ES did already. And NQ didn't. Let's see if that holds. Don't ask me how I know that. If that holds, I think the long is good. If NQ doesn't target these lows and we can close above this, then I think then I think that long is good. If we can't close above that, then I think the long is dead. Yeah. I don't know. What I'm really waiting on is to see if any of them can close above this 1 minute fair value gap here. All right, NQ's making a nice move for sure. It needs to close above this though. Yeah, I think the fact that it's 2 minutes to lunch, I'm not gonna be in this trade. I'm exiting at break even here at the entry. I didn't get the move I wanted during this macro. I was hoping that it would happen by 12, but the fact that it hasn't, I'm okay waiting until after lunch to take a trade. I personally don't trade lunch, yeah. How does the market react after rate cuts? Watch my videos. Do you really just eat up everything ICT says? What did I eat up? I don't know, bro, but I would live trade against you any day of the week, and I bet you I'd fucking kill you. So there's that. You can criticize my trading all you want. Not trading lunch? Yeah, bro, because your mom doesn't like when I trade during lunch, all right? Like, I don't spend time with her as it is, so she's always hounding me about trading during lunch. That's why I don't trade lunch. It has nothing to do with ICT. It's because your mom gets so mad at me, and you know, like it just gives me a headache, right? So I'd rather not trade lunch and go be with her and avoid the headache than have to hear her all day. So has nothing to do with ICT, really. I mean, it's just the unfortunate circumstance of me being in a relationship with your mom. That's it. Otherwise, yeah, you could trade lunch if you want to. All right. Why you get butthurt? Why do you get butthurt? All right, guys. Appreciate you. Thank you all for the donations. Amazing day today with regards to donations. Amazing live stream. Great decision making on the trades. If I took that trade, I would be stopped out. So I'm glad I'm outie. But thank you guys so much for joining. And I gotta go be with Solo Dolo's mom right now. September 1st, free trading webinar. First link in the description. Only 1,000 seats. Once they're filled, they're filled. If you want to join and trade live with me every day, click the link in the description. And I will see the rest of you in the PM session in the Discord. Peace.